Anant Ladha of Invest Arch for Kal also with us on the show. Anant, good having you. Thanks so much for joining in.
Thanks, Neeraj.
So I think what you are trying to say is that if you just compare the mutual funds under various categories and compare them with the benchmarks and look at the benchmark returns, that gives you an idea, a simple idea as to why these schemes would have underperformed and why people shouldn't be worried.
Yeah, kind of. So I would like to divide our discussion in two parts. Firstly, small caps and mid caps mutual funds and indices both have not performed. So we cannot say that just because my small and mid cap mutual fund is not performing, I won't be comparing that fund to Sensex or Nifty. This is what usually new investors are doing. So this is one thing which we have to take care of. Secondly, bigger problem is that even large caps and some of the focus funds is a fund which have investment at 25 to 35 schemes. Those are also not performing, some of them. So that is a bit of worry for investor because he feels that now I am comparing with the right benchmark. Now I should get that return.
So what do you tell such people who ask you these questions? Because some of your clients might be asking you the same question as well.
Yeah, absolutely. So basically, when we see and have a deeper look into Sensex, we see that out of 30 stocks in Sensex, there are just 7 to 8 stocks which form more than 50% of the Sensex, and only these 7 stocks are performing. And it's not necessary that each and every mutual fund will be having those 7 stocks in their portfolio, and that too in the same amount and same capitalization that index is having. So we have to be very diligent in comparing funds. And another thing, very, very important thing is, I always say, history, this is a quote of Warren Buffett, that history teaches us one thing that we never learn from history. When we look at history, we find that what is happening right now, divergence, has always happened. It has happened in 1993, it happened in 2000, it happened in 2008. After every bull run of small and mid cap funds and indices, there is a time where these funds underperform and there are just few stocks which perform in the market. So this has always happened. So now bigger question which I think is we should see how investors should do. That will be a better question and bigger question to answer.
So, okay, let me ask you that question, right? And the reason I'm asking this question to you and we got you to recommend some of the schemes that you're recommending today is because a bunch of queries that came in when we were talking about this topic were around, so fine, our funds have underperformed. We want to consider or we want to figure out which scheme or which set of schemes look good and why. More importantly, why is it that they look good? That's the heartening part for me, Anand, that now a lot of queries don't just talk about tell us what fund to buy, but they also talk about why is it that you're recommending this fund. Now, let's go through some of these that you are recommending. And I would really want to dwell a lot more on the reasons why you're recommending these funds over some of the others. For an SIP that somebody wants to do, and let's assume that the standard SIP period is at least 5 years, if not longer.
For sure.
You are recommending the ICICI Pru Value Discovery Fund. Yeah. Why so?
So ICICI Prudential Value Discovery Fund is a contrarian fund managed by Mrinal. So it's a fund which has stock which are fairly on a comfortable side when we see from valuation comfort. So these are some of the stocks which have not performed. ICICI Pru Value Discovery Fund has superb track record of 10 years, but when you will see last 1 year it has performed, but when you see at 3 years or 4 years down the line, you will see that there is slight underperformance because it's a value fund, especially it's a contrarian fund. So it's a kind of fund which can perform very good in such time when other market and when normal index are not performing. So it can be a very good fund to invest, especially from SIP point of view, but we should always have that 5-year time horizon, especially in value funds.
Yeah, but why this ICICI Pru Value Discovery Fund if it's a contrarian fund compared to some of the other contrarian funds which are doing well? I believe the Invesco Contra Fund is doing rather well for itself as well. So why not that? Why this ICICI fund?
So that is also a good option which you said, but I am preferring ICICI Value Discovery Fund because of the selection which we have seen in this fund in the recent past. Some of the
stock selection,
yeah, it has very unique style of selecting stock. It has pharma in it, it has IT in it, it has some of the stocks which are not performing, which is actually not done well in the recent past and which can perform well because they are undervalued presently.
Okay, interesting. So that's one recommendation. So for a lot of you who want to start an SIP into a contra fund, if you will, or maybe a multi-cap fund, because a contra fund could also be a multi-cap fund of sorts, maybe this is an idea. The interesting one that I wanted to ask you about, Anant, is this HDFC small cap fund. Yes. Now, why why a small cap fund from the HDFC stable? I mean, the mid cap funds have done tremendously well. Chirag Sehgal is fabulous. For the small cap category, there are a bunch of other options available, right? DSP's restarted their small cap fund, which was earlier the best performing micro cap fund as well. There are a couple of other options, newly ones that have come out. Why are you recommending HDFC small cap fund?
So, when we see HDFC as a fund house, it has been very diligent in their stock selection. HDFC small cap is a fund which is still just 5,000 crores plus. Probably one of the smaller funds which HDFC as a fund house has. And if you see the selection, again here selection is very unique. We'll see stocks like Chambal Fertilizers in it. So these are some stocks which you will not find normally in other funds. So it's a very good option to do, and this is probably for the aggressive investors who want to invest for 10 years plus time horizon. Especially the younger generation, this fund can do really well. But someone who is looking for a very stable portfolio, I would not recommend this fund. But if someone can take that risk and be invested for 7 years time horizon, 7 to 10 years time horizon, he'll have a very good sailing down with this fund.
How old is this fund, if you will? I haven't quite studied this HDFC small cap fund, but
it's a very old fund. But recently, from last 2 years, it has been in the focus of HDFC AMC. So HDFC AMC has been focusing this fund from last 2 years. Earlier, as we all know, HDFC Midcap Opportunity was one of the favorite funds which every investor wanted to invest. But now, corpus of that fund has increased to a next level. So better option is to invest in HDFC small cap fund.
Interesting. The size kind of works in its favor. You think it fares better than maybe a DSP or some of the other options available?
Probably because of the selection it has.
Okay. Lastly, for a lump sum investing, the ICICI Pru Credit Risk Fund, can you explain why this one, and why would you? You're referring this from a perspective of somebody who's got some bonus or some large lump sum amount and wants to invest in funds and doesn't know where to invest. You're recommending the Pru Credit Risk Fund.
Yes, for sure.
Explain why.
So basically, I never believe anyone can. I always say one thing: never let anyone tell you that you cannot time the market. If something is overvalued, we have to understand that, and we have to take calls accordingly. Presently, according to me, equity market is quite overvalued, and I see investing in debt fund for lump sum much better than investing in equity funds. As rightly said, we should always avoid some major mistakes if we want to make money. I think investing lump sum in equity, especially at this point of time, can be a bit tricky, especially because new investors have come in, especially in last 2 years. They have not seen 20-25% correction. So we never know how they will react when market correct by 20 or 25%. So it's better to stay. So it's better to manage emotions when market is good and take them into debt instead of taking them in equity and face a troublesome situation in coming times.
Okay, and viewers, please understand the difference. If you want to do an SIP, Invest Arch Protocol says go out and do into equity funds. But if you want to invest lump sum amounts, then maybe looking at the market sentiment or otherwise, they are recommending the ICICI Pru Credit Risk Fund. I believe some of the other funds would be around this category as well in terms of the returns. But yeah, their call is the ICICI Pru Credit Risk Fund. They've stuck to the large cap mutual fund houses when they're giving out their recommendations. Okay, I believe we just about have that much time on the show, so we'll have to wrap it up. But, well, Anant, really good having you. Thank you so much for taking the time out and being with us today on the Mutual Fund Show.
Thank you, Neeraj.
Appreciate your time.
Thank you.
And viewers, thanks for tuning in to this leg of the Mutual Fund Show.